We've taken out yesterday's sell side. We set an order block right there at yesterday's sell side. When I see stuff like that right there, that's the 5 minute. Let's go higher and see what it look like. When I see the market setting breadcrumbs at key levels like that, I'd be very leery of those areas. Like, that's giving me vibes of coming back up, hitting that, and going down. Like, why did you set that order block right at that low? Because, hey, little Hawk, get off my screen. Why do you set that order block right at that low? You know what I'm saying? Because the order block job is to block it from going back through. It's to support the bias of the trend at that time. And you set an order block right at a prior low, right? We do got a fair value gap there on the 5 minute. So, and this is what I was talking about before when I like on the fair value gap video, when not every gap is going to be a fair value gap. Like, what constitutes the fair value? You know what I'm saying? You got to like stay in sync with the algos when it comes to these gaps. So to figure out where the algo is going to constitute fair value, right? So when you get a move like this right here for the, let's look at this price leg right here, right? So looking at this price, and this don't always line up exactly, but this is just the way little Timmy Rogers do it. So I go from the top of this price leg, from this drop down to the bottom right now, right? So boom, you got a fair value gap right here at equilibrium, right next to a order block, right? So the algos, this, and on this price leg, we're still in the discount right here, right? So I wouldn't be looking at this fair value gap to short from, right? If I'm on this entire price leg right there, right? Because this right here is still in the discount. So I will be looking for it to get back to this order block, right, before trying to take something short. And then this right here would be fair value to me because I'm selling from this premium right here, right? This right here, this could be fair value to somebody. Somebody can be like, okay, this is right at equilibrium to me. So that's close enough to equilibrium. So that's a fair value. It's right at equilibrium. For me, this is still in the discount, right? So I wouldn't be trying to short from that all based off this price leg, right? So if I was looking at it from this part of the price leg, because we had a pause, we dropped, we paused, and we dropped. You see what I'm saying? We came down, paused, and then dropped. So now this price leg can be broke up into two sections, right? So now on this piece of the price leg, this gap right here, that's fair value for shorting from. But this gap right here, for me, that's not fair value to be shorting from because that's still in the discount, right? So the algos can very well hit that and keep dropping because they can be super bearish and they not trying to go. They're just going to keep repricing lower and lower. But if you're looking at this entire price leg, now this fair value gap right here to little Timmy Rogers is a fair value because it's pretty much at equilibrium, but it's in a slight premium. You see what I'm saying? But if I'm looking at the overall price leg, right, I wouldn't be looking to short from here for the overall price leg. I will be looking to short from here from this piece of the price leg, right? But we on a 5 minute time frame and we're shrinking. We're trading off of a 5 minute time frame, right? But when you look back at the hourly, right? You look back at the hourly time frame, right? Now on the higher time frame, right? This fair value gap that we're working on now, that's right there at the equilibrium of the price range. So on the hourly time frame, the fair value is all the way up here from this low to this high. If we close this without going back up, now that's the fair value right there of the hourly gap. You see what I'm saying? So now let's put a line right there. We're gonna put a line right there. At that right there. So boom. That's the top of the box. We just gonna pretend like this this gap already closed. The high of this 39.80.25. 39.80.25. Okay, we're just gonna pretend like that hourly fair value gap already closed. Now we're gonna go back down to the 5-minute time frame, right? Right, going down to the 5-minute time frame, and you look at it on the 5-minute right there. See there? What I was saying about the order block being at that prior low. See how that order block is at that prior low? That's why I be leery about stuff like that, because now you got that order block at that prior low that falls right pretty much in the mean threshold of that hourly fair value. You see what I'm saying? Now it's like that out. So if you're looking at the 5-minute time frame, like when I was like, I wouldn't be looking to short there. You could possibly short there because that'll put you where? Back into the hourly fair value gap. If you take the shorts off of the touch of the gap, this fair value gap right there is in that hourly, right? This order block is in that hourly. This top 5-minute fair value gap is in that order. This is how sometimes when you take a trade on a fair value gap and it blows through it a little bit, you see how it's like a 5-minute fair value gap right there. So if it went through your hourly fair value gap a little bit to complete this 5-minute, right? On the hourly time frame, you'll be like, oh yeah, overshot it a little bit, but it's just coming to complete this 5-minute fair value gap, because this area right here is the true fair value on the hourly time frame. You see what I'm saying? That's why I was like, you got to understand what's fair value when you're messing with them fair value gaps, right? Every little gap ain't going to be a fair value gap. You got to get in sync with the algos and see where's the fair value. Are we back at equilibrium? Are we above equilibrium? You see what I'm saying? Are we below equilibrium? That's what I be talking about when I say you got to look for what's fair value.